afternoon, 3 p.m. We are here to share what we know with you. And this is our YouTube channel, and you can always catch me when you come to Community CPA YouTube channel, where you see all of these icons. What do you call that? The little squares representing each of the talk we did. We have more than 1,000 of them in there, folks. So you can do keyword search, type in year-end planning, you find us. I hope you enjoy it. And other than that, folks also ask, hey, how do I make appointment with you? You make appointment with me on our website. Look at communitycpa.com. And there is a place called appointment. Didn't you see that? The green one? Right there on the top right here. If you click, you'll come to this screen. You have all the partners here. And if you need IT, you have Derek. And if you need me, you have me. And you click into my calendar. If you highlight, you come in here and you click on me, and you will actually be able to look at my calendar. What is availability? And once you book and you'll get confirmation, I'll see you there. All right, without further ado, let's talk about what's important today. So we actually want to talk about construction accounting today. And there's a lot of small builders out there, or you just started. You started with one project, and now is the time to file taxes. You're like, Ying, I have a lot of income, but the income I have, I cannot pay taxes. I would have no money to buy materials. So what you are experiencing, it is the construction accounting that you should know. I know for small businesses, why do we care? We're small. We can use Excel spreadsheet. We can get it done. But no, folks, you need to know how to get that done like the big business. I'm not saying that you need to do that right now, but knowing it, have the sound bite of those concepts, it will help you to grow your construction company to the next level. Just in case you do not know me, my name is Ying Sa. I am the CEO and the founder for Community CPA. Yes, under my belt, I have years and years experience. 25 years. Is that too short or too long? I think it's too long, right? But I still enjoy it. I would enjoy another 25 years if I have the privilege. All right, our firm, collectively, we speak 10 different languages. We serve 10,000 plus, actually 12,000 clients worldwide, literally. And not saying it just for saying it, literally, worldwide. And I served on National Taxpayer Advocacy Panel, which is the Federal Advisory Committee to RIS, for 3 years. And I wrote this first book back in 2019. Then I have this book just published last year. I keep on saying this year. Last year, March 2023. I am working on the third book, which is Appointment with Ying at 2 p.m. 2 p.m. is about you grow your business out of yourself. No longer you are in charge, and you are going into universe to merge, acquire, expand up and down and left and right and becoming a large company. So that is the 2 p.m. So I have the 6 p.m. is retiring from your business, which I'm not studying that yet, but I am doing the 2 p.m. Everything we talked about, no responsibility disclaimer right here, right now, because when you take knowledge out of internet, it is like you adopted a puppy and you want the puppy to behave like yours, you got to train it, right? So if you get knowledge out of internet, you want to make sure that fit you and making it yours. So don't just take the knowledge, take the soundbite and goes, that's true. No, don't do that. And you want to learn, you want to tie your own situation with what we talk about and make yourself a great businessman, businesswoman. Okay, practical application, accounting consideration for construction. All right, which one is which? And this is actually when we talk about construction company, we say, hey, you probably better off to account this project or to make your business a accrual method accounting. Some people go, what? Which is which? I am cash method. Oh, I'm not sure. I don't know. I just use spreadsheet. So what do you mean, Ying? I don't use QuickBook. I don't use accounting CS. I just use Excel spreadsheet. And I don't know what method I was using. Am I using cash method or am I using accrual method? I don't know. Does that matter? You should know. That is matters. And so now I want to give you this overarching understanding of the accounting principles so you don't really get confused, because there's a lot of buzzword around this, right? You heard people saying completion method, contract method, and cash method, accrual method, and hybrid approach method. There's just so many buzzwords, and don't get confused about that. Just think of this way. There is overarching method, which is accrual and cash. When you have accrual method accounting, you recognize revenue and expense when they are earned or incurred. When you earned it. You earned it means what? Earn doesn't equals to deposit. You could deposit $100 million, but you only earned $1. You see what I'm saying? And incurred, expenses that incurred, means that you could be driving the new truck already, but you hasn't paid yet. But that expense is incurred. You already send it. You already use the product. So that way you need to look at accrual accounting. Cash accounting is all about what's in and out from your bank account standpoint. For example, you got deposit coming in, that's your income. You got check going out, that's your expense. So you see, cash accounting is so many ways very similar to your bank statement. Am I right? So in and out. And the hybrid approach is some of small construction company. They are small. They do little handyman work, so they don't need accrual accounting. They just use Excel sheet to track it. But suddenly, they got a big project. This project would last for 12 months. So he got the project in November, it will last to October next year. Suddenly, you have a need to account this particular project maybe on accrual method. Let me tell you why. But it is allowed. You can have your cash method, but specifically a project is on accrual. It's called hybrid approach. That's the third one. So if you are ending up in this kind of thing, and in your tax return, you need to identify that, what accounting method you're using when you report your construction business. All right, so let's just look at accrual accounting. Accrual accounting is the one most of the construction companies using, who must be on accrual method. Not every company need it. If you want to use Excel spreadsheet for your in and out, no problem. That's a cash method. But when you have so much revenue, you would have to use accrual accounting. So that definition is one business with average annual gross receipts exceeding 25 million for the preceding 3 tax years are generally required to use accrual method. What does that mean? So we're in 2024, 2023, 2022, 2021. If I add my 3 years together, gross sales together, divided by 3, the number is over 25 million. That means I should be on accrual, period. But what if I'm less than 25 million? That means I don't need to be on accrual if I don't want to be, right? Business can voluntarily choose to be on accrual. Then you say, okay, fine, I know. I can be on accrual if I want to. I don't have to. But tell me, what are you selling? So why is accrual method is such a deal? It's such a deal because under accrual accounting method, you can recognize revenue based on projects. What does that mean? So the most common way for construction company to recognize their income, their revenue, is by percentage of completion. You know how when you bid on a job, say you build a building, $1 million worth building, $1 million. So you are going to charge this client $1 million. And you sign the contract on December 1st, 2023, and you ask client to pay you $200,000 for the down payment. So you can start working. So client paid you $200,000. But between December 1st to December 31st, you finished only let's say only 10% of the construction. 10%. So the completion method would say that you take 10% of revenue, which is $100,000, not the 200, and then you take 10% of the expense, you match that up, you file taxes. So if your general profit is about 10%, then you actually have $100,000 revenue and a minus about $90,000 expense. So you have 10% of revenue, 10% of net profit. That's what taxes you're gonna pay. You pay 10% times tax rate. There you go, you finish your tax return, right? So this is percentage completion method. There is another method, it's called completed contract method. Then if this project you got, and you're not accounting anything, you're not accounting income, you're not accounting expense, you're gonna wait until everything is done. Then you will report income, you will report expenses. Yes, you can do that. So these are the most common accrual accounting method. Earlier when I was talking about this $200,000 the client already paid you, and remember you only completed 10%, so there is another $100,000. Where did that go? Where did that go? And that one is what we call the overbilling liability, folks. So under accrual accounting, you can have overbilling liabilities. You don't need to pay taxes for it because you overbilled your customer. So that $200,000 you got from customer, $100,000 become your revenue. The other $100,000 goes on to your balance sheet, become a payable overbilling liability. And what about you finish the $1 million building and supposedly you got $1 million from your customer, but they're like, nah, we're gonna keep 10% as a retainage and we don't really want to give you yet until we know the heating cooling is working, because it's gonna take us a year to know whether the heating cooling is going to work. Like today, right? Today we had, I'm here in Des Moines, Iowa. We had a really big snow this morning. First of all, there's no electricity when I woke up, and so I was like figuring out from my phone. I figured out that the office actually have electricity, so I just actually moved myself from home to the office. And even though the snow was really big, but it's still better to stay in the place with electricity. So with that kind of condition, sometimes you finish construction, but your customer want to test it. So they don't give you the money one time. That retainage is what? Is receivable. So yes, because you are on accrual, so you reported $1 million income and you make deduction, you pay taxes, but you still have $100,000 on retainage. You don't know what to do with it. I'll tell you what to do. If you have a really nice customer, you know that they're gonna pay you eventually, then you just keep it on the book. When the customer pays you, and you are good. So you reverse receivable and you put in the deposit in the bank, you already reported income. But what if it's a nasty client? And not only they don't pay you, and they also go ahead and file bankruptcy on you, and it doesn't really matter, you don't get your money. Then you can write it off, reduce the $100,000 from the income that you claim. So see, so these are accrual accounting kind of thing. If you're under accrual, you would have those tools and you can do allowance on receivable. And if you have multiple contract going on and you have multiple retainage sitting on your bank account, you know some of them cannot be collected, I would just write them off. So based on your experience, right? So really, you would know how to select the best method. You may say that, well, Ying, I'm so small. Those big buzzwords are so complicated. I don't know how to treat them in accounting. I don't know how to do the debit credit like you said how to do. Not a big deal. If you use Excel, you can write about, oh, I overbilled this much. You can write about, I have this much, I haven't really got it from client yet. Maybe they're not paying me, I don't know. Because those are the things your accountant would spot. They would know exactly what you're saying. But if your tax form says it's on cash, then these are all not important. But if your tax form says you're on accrual accounting, you're a construction company, these are your daily cup of tea. And you should have this cup of tea every day, because that helps you to save your cash flow, folks. Can you imagine by the end of December, you got $200,000 and a completion method allow you to only report $100,000. The other $100,000, you already have it, but you do not need to report it to the income. So that gives you $100,000 additional cash flow. Am I right? And then your retainage. If you ended up and writing off your retainage, and then you'll be paying less taxes because your income gonna drop. So that would give you cash flow. Am I right? Of course I'm right. All right, selecting the best accounting method, percentage completion method is the way to go, folks. If you are doing accounting for your construction company, you should look into IRS Code 460 and really know that how to do these accounting properly for yourself. Of course, there's exceptions. You don't have to be the percentage of completion method. There's a lot of exemptions, and one of the exemptions I already mentioned to you, right? If you are less than $25 million in the total revenue, and you can choose your method. You don't have to go to accrual, but you know that accrual method has so many things that you can work with, right? It's reflecting your operation a lot more closer than a cash method. Am I right? So there's a reason why construction company should be under accrual. Then of course, for selecting accrual method, and you also have a way to make that only for a project. For example, you always did your taxes on cash method. Ever since you started this handyman company 20 years ago, now it's becoming bigger and bigger. You were on cash method the whole time. Now you're getting bigger contracts. So what we would recommend you to make sure that you choose the project and you choose contract method and use completed contract method to do it, or selecting your project, make that particular one by completion method. As long as you consolidate all of your expenses and income at the end of the year and report that properly on your corporate tax return, you should be good. You should be okay. So with that said, and I want to kind of pause right here and let's rethink about accounting method for construction company. So if you have a construction company, and the reason we say that is because construction is not necessarily always very quick and short, right? They sometimes takes time. Sometimes it takes years. So when you get into that kind of construction, you are using completion method. The reason you want to use completion method is because you don't want to just count on money you have, then say, oh, that's the money I should pay taxes for. No, because that may be overbilling liability, right? So with that said, I want to make sure that you take care of your own accounting by knowing exactly what you want to choose to account your things properly. All right. Then now let's talk about, the accounting software that you use. This is also related to the construction company. A lot of times people come to us with their construction company. And when they come in and all they have is one column, income, expense, this and that. and they don't really have anything what we call the job costing. Because when you, in the construction industry, and the most effective way to manage your money is to know the job cost. Because once when you grow from small to medium to large, and you will gain experience, you actually know this kind of job would be how much of a cost to you if you're doing job costing accounting consistently, not letting yourself to just look at the big picture. And I mean, if you are a boss for a construction company, you know what I'm talking about. You can go to a site to look at this project. You are there all the time because it's a bigger project, it's an important project, and the client is a little bit needy, and you need to be there. So you are there all the time. Then you know this particular project. What about the other two? The other two that your foreman was taking care of, you lost clue of how that one is going. So when you come back to the office, goes, I feel good because I think I'm making pretty good progress in my project. You know what? You only have that body temperature for that one project. In construction, it is very, very important. As an owner of the company, you need to have understanding of every single jobs that you have. That's why I brought this one into together with the accounting method. Yes, we can choose the right accounting method, but if your job costing is not done right, it's not helpful. Job costing basically means that when you have a job, you know how much you're going to collect. You also need to know how much you're going to cost. So the cost is direct cost plus indirect cost. So what is direct cost? Direct costs are the ones you use to build the building. Materials, labors, additional charges for things like architecture fees, consulting fees, legal fees, and things like that. Workers' comp, for those workers who are working for you. And then you also have indirect costs. The owner's supervision cost and things that doesn't really advertising cost, not really tied to any of the jobs, but general expenditures, right? So with those kind of things, you know that when you have a project, not only you know exactly what the project itself costs you on the indirect cost side, you also need to know about the indirect cost side. Indirect cost is cost that are not directly related to your project, but yet is necessary to have in this project. Normally, the experienced construction company, they come up with indirect ratio, their indirect cost ratio. So for every man hours, they put in the indirect cost 25%. So that way, when they look at man hours for this project, they already have indirect cost calculated to it. So my next slide is actually just give you that formula. Project cost, job cost equals to materials plus labor plus indirect cost. And the indirect cost equals to estimated overhead cost divided by total anticipated projects in the year or total hours of the labors. So let's say if you just have two projects in the year, one is $300,000, the other project is $700,000, and say your total indirect cost, the money you pay to your CPA, the money you pay to Yin, say $1,000. Then 30% of 1,000 should be allocated to that project. 70% of this 1,000 should be allocated to the other project because you just have two projects, right? And you can use those kind of value to divide your indirect costs. But the key is that you want to get enough project in your business so your indirect costs can go down. The lower it is, the more competitive you are. So obviously, it is always a battle. Either I lower the fee, I got more project, I couldn't finish, or I raise the fee, I got less project and I could finish. That is the business owner's puzzle piece. There's no answer to it. There's just a walk you path and get a feel for how you do. And some of the job, even if they pay more, you don't want to do it. Some of the job, even if they pay less, you want to do it. So those are all your formulas, and you want to figure it out on your own because it is very important. I also made a list. Of the expenses particularly important to the construction company. I know I have you read through it. Labor cost, of course you know that. But I want to talk about workers' comp. A lot of times, the construction company would underestimate the workers' comp. You know that when you get into the first year, when you get into workers' comp, and you give them an estimate, the agent come back to you $2,000. Then at the end of the year, they come up with this audit for workers' comp. And they pay everybody under the sun, including your subcontractors. So they give you a $12,000 bill for workers' comp. That story sounds familiar, right, folks? So workers' comp is very particular to the subcontractors. A lot of you are hiring subcontractors, and remember this. Subcontractors who do not have workers' comp would have to be purchased by you, because that is just how it is. But then you may say that, well, that's a lot of cost for me. Is there a way I can reduce the cost? Absolutely, there is a way. Let me explain to you. There is a way because when you have a contractor, you want them to be a company. When they are LLC, say I'm Jose Hernandez, and I am your subcontractor, and I do tiles for you, so I form a company called Jose Hernandez LLC. And I use this company to go to workers' comp agent to get a certificate of exemption for workers' comp because I am the only worker there. I own 100% of my LLC, so I can exempt myself from having workers' comp insurance. But with that piece of paper, when you hire me, I would give that to you because you will know that I already got my workers' comp taken care of. It doesn't matter I'm exempted or not, I already have my workers' comp insurance certification, so you do not have to pay for me. So when you go to your workers' comp agency and you can show that, oh, my contractor has workers' comp insurance already, they're either exempted or they already paid for themselves. So this is a big deal because workers' comp is very expensive, and it is like after fact shocking expensive. It's not something you know it right away, but you just kind of discover that at the end of the year, and it goes, oh yeah, I didn't make any money because I didn't know workers' comp going to come for $25,000. So with that said, all of these expenses that I'm showing you is important for you to know as part of your job cost, right? You want to know what they are, had a good handle of them, then you know that each project, how much it would cost you. Now, once you know the cost, and you can figure out what accounting method you want to do, and then you can file your taxes with a smile on your face because you save your cash flow. And not every penny you receive from construction income, it needs to be reported as income, just depends, right? We talked about that. So I hope that this conversation at least liberating some thoughts for you, and knowing that cash flow doesn't equal, you have cash flow with you, doesn't equal you made money. Because the earlier example I gave you, $200,000 come in, only $100,000 is income, and the other $100,000 is liability. But you have a $100,000 cash flow, you see? So really having that cash flow is important because sometimes material just come out and it's low in cost and you want to buy more and those kind of things. So with that said, I want to lead us to the final page of our webinar. Remember, we always do our webinar. Why is not working? We always do our webinar at 3 o'clock in the afternoon. So this is, if you have interesting topic that you'd like us to explore with you, and you want to email Catherine at communitycpa.com, let her know that what you want to listen. This construction accounting piece of information is being asked by our small construction companies because there is like which one is which. I'm on completion method. Am I accrual? Of course you are, because that is the fundamental, right? That is your accrual accounting, then you are going into completion method. But on your tax return, folks, remember that tax thing you do, they defaulted accounting method to cash method. If you're a construction company, you want to be vigilant about that, making sure that you choose the right accounting method. All right? And our office, Community CPA, opens 6 days a week. Yes, we open from 8:30 to 5:30, Monday to Saturday, and 515-288-3188. That is our main number, and you can always find us on the internet, always find us on YouTube channel. I will see you again. I hope this little bit of knowledge make you brighten up.